Hello, guys. I'd like to welcome you on our fifth webinar, but before we start, I'd like to confirm that you can basically hear me. So those people who are listening to me right now, please type yes in the question section so that we can proceed. Okay. All right. I need some more confirmations. I received like 5 of them, but there are much more attendees. So please, guys, just confirm. I need that at least 20% of all the attendees to confirm that they listen to me. Okay. All right. All right. Okay, guys. That's enough confirmations. And we're going to be proceeding. Today, I'd like to tell you that we're going to be starting a webinar which is called Mastering Forex Trading. But before we start, let me say that the webinar is sponsored by HYCM. And let me briefly tell you some facts about the company. HYCM is one of the most recognized names in Forex industry, bringing 40 years experience and history, and is regulated by 2 of the world's leading financial jurisdictions, FCA and HYCM. With a long track record of providing its global customer base with an outstanding and trustworthy trading experience, HYCM offers clients everything that they need to make informed trading decisions. HYCM has accumulated a large collection of awards since its inception, including World's Finance Best Mobile Trading Platform in 2017 and Global Banking and Finance Review's Best Forex Broker in 2017 as well. Its recognition as an industry leader has helped it evolve as the online broker of choice for traders across the globe. HYCM offers clients excellent trading conditions, great liquidity, and low spreads, delivering a super efficient service. With its strongest focus on fast execution and low-cost trading, always a leader in embracing cutting-edge technology, HYCM strives to stay ahead of industry trends by adopting the latest technologies to cater for its clients' evolving needs. All right, guys. And right now, a brief disclaimer, which is needed to be mentioned. So a short disclaimer is behind your screens. I'm going to read it really quick. Any opinions made may be personal to the author and may not reflect the opinions of HYCM. All expressions of opinion are subject to change without notice. This material is considered a marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for any transaction in financial instruments. HYCM makes no representation and assumes no liability as the accuracy or completeness of the information provided, nor any loss arising from any investment based on recommendation, forecast, or other information supplied by an employee of HYCM, a third party, or otherwise. All right. So far, so good. We're done with the official part, and right now we're going to be discussing my personal trading systems. I'm going to be sharing 2 trading systems with you today. The first one is called My Scalp Strategy. This is the system which I use on daily basis when I trade. All right. And basically every day I use this one when I have time to sit behind my PC, because it does require you to sit behind the monitor pretty much all day. Maybe not behind the monitor, but behind your phone or tablet as well, because basically you can use a MetaTrader on your tablet and you can receive signals on it as well. But as my experience show, the performance is better when you trade behind your PC, but not a mobile device. Okay, It's a bit more, it's a bit complicated system. It does require you to use two indicators at the bottom of the page and two moving averages and one trend indicator as well. So there are two oscillators, two moving averages, and one trend indicator. I'm going to explain all these parameters and how it works and what are the rules of this particular system in the meantime. But before we start, probably you would need to grab a notepad and a pencil if you go old-fashioned way. And if you are living in the 21st century and using your PC to take your notes, probably you would want to open a notepad application or a Word file on your PC and keep track of the parameters of the particular indicators, which I will show you. All right. Hope you're prepared, or will be prepared in the meantime, but let's start. So basically, I do use two time frames using this system. Okay. Guys, if you have questions, basically you can actually ask them when we go, but I would prefer if you keep questions not until the end of the webinar, but until the explanation of the system rules. So it would be better for us not to stop every time I'm describing any particular indicator, but by the end of the system description, trading system description, I'll answer your questions. All right. There are two time frames in this particular system. 4-hour time frame is used only to determine long-term trend, and 15 minutes time frame is used both for analysis and trend operations. Okay. Let's go. So when we use 15 minutes chart, we apply an envelope indicator with the EMA inside 34 parameter applied to close plus minus 0.21% deviation added zero level. I will show you how it looks on the next slide. Basically, the next slide is how this envelope indicator looks. It's EMA 34 applied to close plus minus 21 deviation added zero level. So basically on the chart, it would look like that. And later on, if you don't know how to put an indicator on your slide, you can ask me. I'll briefly show it to you. Though we were building indicators before. Okay. For one person, sound doesn't work, but nobody else complaining. So Tristanto, it's probably the problem with your headphones or with your PC, but everybody else is hearing properly. So the next indicator which we're going to be using is EMA 100. I'm going to be going, come on guys, go back to slides. And what this is going back to slides. Come on, it's just two time frames, 15 minutes and 4-hour time frames. Those are the parameters of the particular system. So envelope indicator, I have already showed to you. The next slides, I'm going to be showing you how those indicators look on the chart. So please keep your questions up until I describe all the system, and then we go through it once again if it's needed. So EMA 144, which is called major in this system, EMA 72, which is called minor in this system, a stochastic indicator with the above parameters, and a MACD indicator with these parameters. Also, this is all of those indicators can only be applied to 15 minutes chart. What we do use on 4-hour chart is only Ishimoku indicator. Ishimoku indicator with those parameters 9, 26, and 52. We apply for 4 charts only. Okay. I hope you kept your notes. So envelope indicator I have already shown you. This is EMA with a parameter 144. What is an EMA? It's an exponential MA. So basically, it's a moving average. Just the type of the moving average is exponential. Let me switch to a MetaTrader and briefly show it to you. Let me just build a new chart in here. Okay, and this is control panel. All right, so basically I have this one, right? If I want to insert an indicator, trend, moving average, yeah, this is a MA method, simple exponential. So I do use an exponential method and I call EMA. Okay, so I hope it's clear. All right. So this is how it looks like on the market. We also use MA exponential moving average with a parameter 72. Sorry, it's called minor. In here, it's a red color. Yeah, this one. We do use a stochastic indicator with the parameters 15, 3, 3. You can see it on the bottom in here. All right. And a MACD indicator, which can also be seen here at the bottom with the parameters 21, 34, and 7 in here. Okay. And on 4-hour time frame, we use a Ishimoku indicator. This is basically a classical Ishimoku indicator. We don't need all the lines, like it has a cloud in here, it has 3 different lines, but we only need 2 lines. A red one, which is called Tenkan, this one, red one, and Kijun, which is a blue one in here. So basically we need only these 2 lines. The rest you can delete, at least. Let me just briefly show you my MetaTrader, my Ishimoku template. Ishimoku, it does look like that. So it doesn't have any clouds, anything extra. It's simply has 2 lines, Tenkan and Kinju. That's it. Okay. All right. So the first thing you want to do is you want to determine trend with the help of Ishimoku indicator. It's really simple, and you have to follow those rules. If current price is above Kijun line and both Tenkan and Kijun are moving up, we see bullish trend. So let's jump to a MetaTrader. Yeah, this is obviously not the bullish trend. In here, it's a bullish trend, right? So we can basically see that the price is above Tenkan line and both lines are going upwards. That's a clear indication of the bullish trend on the market. Okay. The bearish trend can be seen obviously on Euro USD recently. Yeah, the price is below this Tenkan line and both lines are slowing downwards. So it's a clear indication of, it's 1 hour, sorry. We have to analyze 4 hours, obviously, slowing downwards. So it's a clear indication of bearish trend in here and the bullish trend in here. It's just, it's above and the order of the line is the following. Okay. So once again, if current price is above Kijun line, both Tenkan and Kijun are moving up, we see bullish trend. On the opposite side, if current price is below Kijun line, both Tenkan and Kijun are moving down, we see bearish trend. Okay. If none of the above applies, we see flat market. That's basically the trend, the determination with Ishimoku indicator. Okay. So those are the examples, the bullish trend on the Ishimoku indicator and bearish trend on Ichimoku indicator. But we have already discussed that. So stage 1, trend determination. If bullish trend was spotted on 4-hour time frame, we can only open bullish positions during the day. So we can only buy a currency pair, a stock, a commodity, anything else. So we buy if bullish trend was spotted on 4-hour time frame with the help of a Ishimoku indicator. If bearish trend was spotted on 4-hour time frame, we can only sell. Okay. If no trend was spotted on 4-hour time frame, we should analyze 15 minutes time frame. Okay. All right. So trend determination on 15 minutes time frame. It's a mistake. It's not M5 but M15. Okay. Yeah, come on, guys. I'm going to be answering. I do receive questions right now, and those questions are not even related to the trading system. I would like to answer those questions, but after we discuss the trading system. So, Mohammed, I'm going to be answering your question later. All right. So, trend determination on M15 bullish trend. Major EMA is close to the bottom line of the envelope or out of the envelope. Minor EMA is leaving central part of the envelope and trying to get out of the envelope bottom line. I would show it to you how it looks on the chart a bit later. Order of EMAs. Central EMA on top, minor EMA, major EMA at the bottom. All EMAs are turning upwards. That's a bullish trend on M15. All right. So how it looks? Basically, this is a bullish trend. We can see the envelope lines, right? So the slowest one, okay, the major EMA, it's at the bottom of the envelope and trying to get out of the envelope, or it's out of the envelope in here. The minor EMA is below the central line of the envelope, and all three lines are going upwards. So it's a clear indication of bullish trend. Once again, the rules. Major EMA 144 is close to the bottom line of the envelope or out of it. Minor EMA is leaving central part and trying to get out of the envelope bottom line. And order of the EMAs: central EMA on top, minor EMA, and major EMA at the bottom. So like that. Okay. As you could have guessed, the bearish trend would be on the opposite side. So minor EMA is close to the top line of the envelope. Minor EMA is leaving central part of the envelope and trying to get out of the envelope top line. Order of the EMAs are the following: central EMA at the bottom, minor EMA, major EMA on top. All EMAs are turning downwards. So that's the clear indication of bearish trend, of basically bearish trend. So minor EMA is out of the envelope and going downwards. Major EMA is below it and it's also going downwards. And the central EMA of the envelope is at the bottom of those three of them, and they're all going down. So the clear indication of bearish trend. Okay. All right. Then, how does a flat market looks? All EMAs are staying together and intervened. So this is the clear example of flat market. The distance between EMAs is not more than 20 pips. In here, it's like, yeah, they're all intervened. The distance is not more than, even like here, you say, okay, it started to change, but if the distance is lower than 20 pips, so it's still flat market. So you can see the example right here. And there is another type of the market, which is called ambiguous market. So it's when market is neither flat nor trendy, but it may be trendy on daily time frame or H4 time frame, but in here you cannot clearly see let's say on Ishimoku indicator you could not clearly identify trend, right? You go for M15 time frame and you see that the basically sometimes market is trendy like in here for a couple of hours and then it starts to go flat, then it's trendy again and starts to go flat. So it's ambiguous market. Okay, all right. What do we need this trend determination for? Because different rules apply to different markets. So stage one was determining trend. Stage two is spotting signals. Not opening positions yet, but just spotting signals. So what do we do? On trend market, a signal appears when there is a rebound from major and minor EMAs. Okay? So when price rebounds from major and minor EMAs, that's a signal on trendy market. On flat market, rebound signals from envelope upper and bottom lines. Okay, flat market. And ambiguous market. Those are combined signals can be used. So rebound from both EMAs and envelope lines at the same time. So a lot of signals are generated on, as you can see, on ambiguous market, but there is also two filters for ambiguous market signals. So there would be less positions than on trendy or flat market. Stage three, positions opening. Finally, we came to to a stage where you can basically trade. So position should be open when stochastic is coming out of oversold, overbought zones, and there is a rebound signal. So when you spot a signal, you have to take a look at stochastic. And if it's coming off oversold or overbought zones, that's a possibility for you to open a position. When stochastic is coming off oversold, we should look for bullish entrance. When stochastic escapes overbought zones, we should look for bearish entrance. It's possible to use divergences as well. So MACD is only used as an additional confirmation on ambiguous market. So on ambiguous market, you have to spot a signal, then you have to take a look at stochastic. If stochastic confirms it, there is an additional confirmation from MACD which we need to receive in order to open a position. So this confirmation, when MACD crosses the signal line upwards, we should look for a bullish entrance. When MACD crosses signal line downwards, we should look for bearish entrance. Okay? It may sound complicated, it may sound a lot of figures, a lot of indicators and so on, but basically it's relatively simple, and the next examples will show it to you, and later I'm going to be analyzing the live market with the help of this system. So opening and entry. Let's say we see that the market is trendy on Ishimoku indicator. We spotted a bearish trend in here, right? So we know that we can only open short positions. We can only sell. Okay, no problem for us, even easier. So we open a chart. We see this picture like that. It's a clear bearish trend in here. You see that the EMA is out of the envelope in here, yeah, or close to the line of the envelope. The minor EMA 72.1 is below it, but above the central line of the envelope. So the order of the envelope is classical. It's major EMA on top, minor at the in the center, and central line at the bottom. clear bearish trend. The signals are generated when there is a rebound from either minor or major EMA. Okay, so this is a signal. In order to open the position, we need a confirmation, and the confirmation comes from stochastic. The stochastic oversold zone we see here. For me, on this time frame, it's 80 and 20. Yeah, you can see that it rebounded, and there is a confirmation. We sell it, okay, in here. Then another signal appears. I'm not sure whether it would be closed in profit or it may be, be closed by trailing stop because it went back. But another signal appeared, right? It's a rebound in here, yeah, and in here. So we sell it from here. In here, there is another signal because it's rebound, but there is no confirmation, so we don't open the position. But we have opened it right here, so we wait. It goes down. Once again, it rebounds. There is a confirmation. We sell. There is a rebound. There is a confirmation. We sell. There is a rebound. There is a confirmation. We sell. There is a rebound. There is a confirmation. We sell. Like in here, yeah, probably only this position would have been closed by stop loss because there is a rebound, there is a confirmation, all right, but it doesn't go the way we expected. But we had like 1, 2, 3, 4, 5, 6 positions opened, yeah, and they were all closed either by take profit or trailing stop. The minimum which you would have at least 0. The trailing stop would have closed you in 0, and obviously those two positions would have been really profitable, this one and this one. This one is probably a stop loss. So that's opening entry on trending market. Another example, right? So we basically see in here the trending market is not as obvious, but also can be spotted. So the order of the EMAs is like we saw it, yeah. Major EMA on top, minor EMAs is in the center. The central line is at the bottom. Okay. How does trailing stop work? I received a question. The trailing stop basically work depending on your strategy. So probably I use it as, let's say, I open a position when it's minimum 30 pips profitable. I put a trailing stop on an opening level plus 1 pip. So in the worst case scenario, I would receive 1 pip profit. Yeah, if the market go against me. So that's the way of using trailing stop. The trailing stop is basically moving your stop loss in a profitable position. Some people use a floating trailing stop when, let's say, they use like 25 pips floating trailing stop. When the market moves in your direction, the trailing stop moves with the price and so on. But it's okay. I guess I answered your question. Then let's go for another example, right? There is a clear bearish market. We receive a confirmation, we receive a rebound signal in here, but there is no confirmation in here. So we don't open the position. It goes up, another rebound signal in here, and it actually appeared in here. And there is a confirmation. I don't know why those arrows are in wrong places. In here, yeah, it goes from oversold zone in here and it rebounds in here, so we can open a position in here as well. It rebounds from the MA, goes from oversold, yeah, it touched oversold basically a bit, and we can basically sell here. Rebound signal, oversold zone, we can sell. Rebound signal, oversold zone, we can sell from here. Yeah, probably this is not the best entry as well, but trend changes, that, yeah, you cannot open 100 profitable positions. Yeah, sometimes I lose as well. So in this case, you open an entry, it goes how much, like 15 pips, maybe 20, and then, the flat market starts, right? On a flat market, like we have already discussed, all the moving averages are intervened, yeah, and the distance between those moving averages is not more than 20 pips. So we see flat market. This is a good example of flat market. So what we basically do is we trade from when the price touches a bottom or a top line of the envelope. We don't even consider, moving averages to be support or resistance levels. Those moving averages are just on flat market. They indicate that the market is flat, and that's it. We don't use it in any other way. We just consider market to be flat. So when there is a touch of the line of the envelope, we look for confirmation from stochastic, yeah, and we trade. Like I said, if the stochastic is in oversold zone, we buy, and if it's in overbought zone, like in here, we sell. So basically, we're going from one side of the envelope to another side of the envelope. We consider market to be flat, and it doesn't have any real direction, so we trade in this small corridor, buying and selling, buying and selling. Yeah, you see that a lot of signals are generated by stochastic in here, like in here, in here, in here, in here as well, but they are not we don't open positions because there is no signal of touching an envelope line. Sometimes, the price can go like 1 pip above the signal line. Yeah, we can also consider that it touched it. 1 or 2 pips is not an issue. But if the situation is like that and the gap is like 15 pips and they say, oh, it's almost touched, okay, I'm going to open the position. In this particular case, yeah, it would be okay, but you cannot do that. You have to wait until it touches, or let's say there is 1 pip or something like that. Does envelope, I have a question, does envelope work as a Bollinger Band? Pretty much yes. But, now, I wouldn't say that. It does look like Bollinger Bands when you put it on the trading terminal, but it's different because in here, basically, those are the top line and the bottom line are moving averages with a deviation. So it means they repeat they repeat itself. So it's just the same line, only let's say 20 or 30 pips above and below the central line. With the Bollinger Bands, it's different. The bottom and up lines of the Bollinger Bands, they're different, and there are squeezes of the Bollinger Band. You cannot see any squeezes in here, so it's constant. So you can try to apply the system with Bollinger Bands, but you have to test the result. It's adjustable, but it's a different indicator. Okay. Once again, one other example. Like let's go quicker. In here, yeah, it was like how much? It's 88, 93. It was like 3 pips. You can consider that it touched, but probably you wouldn't. But okay, probably this there is a rebound, but it's not confirmed. You see, it's not confirmed, so we could not solve it here. On the contrary, in here it touched, or at least 1 pip or something like that, and it rebounded. So we could have purchased it here. In here as well, it touched, rebounded, we buy. In here, it touched, rebounded, we sell. So basically like that. What are the parameters of the envelope? I'm going to be scrolling it further, you will see. Like 500 people would not approve me, going back in the presentation for 1 person. Okay. All right. Opening entry ambiguous market. You can basically see that the market ambiguous. Sometimes they are intervened. Yeah. Sometimes it more looks like a trendy market. So basically the market is ambiguous. What we do is we use all the signals which are generated, like bouncing from EMAs, right? This major and minor EMAs, bouncing from the ends of the envelope. But we have a really important condition that this signal have to be confirmed on both stochastic and the MACD, right? So in this particular case, it bounced, rebounded from the bottom line of the envelope, and it was confirmed by both the indicators. Yes, so we could have bought it. In here, it rebounded from this major EMA. It was confirmed, we could have bought it. Yeah. In here, it kind of rebounded, but it wasn't confirmed on stochastic, so we don't trade. Yeah. All right. It's also rebounded here, but was not confirmed by MACD, so we don't trade. In here, it rebounded and it was confirmed on both, so we trade. Okay. So it does how it does work on ambiguous market. Another example of ambiguous market. You see how the market works, yeah? It's 1 or 2 candles, peaks, correction. 1 or 2 candles, correction. 1 or 2 candles, correction. And then here, yeah, if I show you this piece of market, you would say, oh, it's obviously trend. Yep. Or this piece, it's obviously trend. Yeah, but on a larger picture, you can see that basically market is ambiguous. And we see a rebound signal. In here, we can buy. In here, we can buy. In here, it touched the envelope and it was confirmed on both indicators, so we could have bought it. In here as well. All right? Okay. I'm going to be going back a little bit to show the parameters of the envelope, or okay. But for now, just take a look at least what I do with my stop losses and take profits with this particular system. So stop losses for trend market, it's 30-35 pips. GDP related pairs. I'm sorry, it's not. Yeah, GDP related pairs 35-40 pips. For flat market, it's 25-30 pips. GBP related pairs 30-35 pips. For ambiguous market, it's 30-35 pips, and GBP related pairs 35-40 pips. All right. Take profits. For trend market, it's 50-70 pips. GBP related 60-80 pips. For flat market, the opposite side of the envelope at the moment of entry opening. Let me scroll a bit back. Yeah, this is a flat market. So basically, now when it touches the envelope, we and rebounds. Yeah, our aim would be here. The envelope will go down, but still we put a take profit and we don't change this take profit until it triggers or stop loss triggers. Okay, so the opposite side of the envelope. Ambiguous market, 40-45 pips take profit, and GBP related pairs 50-55 pips. Those parameters are adjustable and you can basically apply yours, but I give you those which work best for me. So let's scroll a bit back. Those of you who missed the parameters, here they are. Just take a brief notes and we're gonna be moving forwards. So should I analyze live market right now, or I should explain the second trading system and then we analyze market with the help of the first trading system and the second trading system? The second trading system is much simpler. There is only one indicator. and it's just two moving averages, and the rules are really simple. I will explain it to you in 5 minutes. Unfortunately, it generates less signals, but it's also possible to trade with the help of it. So guys, I'd like you to reply me in the question section. Would you like me to analyze the live market right now with the help of the first trading system, or we discuss the second trading system and then analyze market with the help of the first one or the second one? Okay. Okay. All right. Most of you wants to discuss the second one and then analyze the market. And I'm here for you, so that's why we discuss another trading system. It's called the three confirmation strategy. It's relatively simple. Strategy slogan is "Trend is your friend." Yeah. We use three time frames though. 1 hour time frame is used both for trend confirmation and trend operations. 4 hour time frame is used only to confirm trend, and 1 day time frame is used only to determine long-term trend, right? So instruments which we're going to be using is EMA 12, which is called major, EMA 5, which is called minor, and RSI indicator with added 50 zone. So there is a 50 zone, but I do prefer to put a level there myself. So it's easier to analyze market. So basically, that's how EMA 5 looks, right? Nothing special. That's how EMA 12 looks on the chart, the red one in here. So nothing special as well. And how RSI looks here on the bottom. It's just a simple line, and the 50 zone in here you see with the small dots. So it helps you to understand. So those are all instruments which we're going to be using. Position opening conditions. You buy when the order of EMAs is minor EMA on top, major EMA at the bottom. RSI is above 50 zone. All times mid conditions 1 and 2. So basically it's the order of EMAs, right? Minor on top, major at the bottom, and RSI is above 50 zone. How does it look? Okay. That's at the three screens. It's called three confirmations. So first we analyze daily time frame. Yeah, like in here, this red line, it shows the position opening. Okay, this red line, a day and the time when the position was open. We spot that on this daily time frame, this is daily, that the minor EMA is at the bottom. Major EMA, I'm sorry, minor EMA is on top, yeah, and RSI is above 50 zone in here. We go to 4 hour time frame, the same situation here, probably you can't see it, but the yellow line is above the red line, yeah, and it's above a 50 zone in here. And on the 1 hour time frame, the situation is the same. Yellow line is above, or it just on this candle, it appeared to be above the red line, and it's above the 50 level. It jumped. So we basically can open the position from here. We obviously we bought, and it goes up. All right. Position opening conditions for sell orders. The order of the EMA is quite opposite. Minor EMA at the bottom, major EMA is on top. RSI is below 50 zone, and all time frames meet those conditions. So we go on the chart. We see that in here on the daily time frame, the order is like that. So major EMA on top, minor at the bottom. It's below 50 zone. In here, it was quite below the 50 zone because it was like 48%. The same conditions on 4 hour time frame, right? Below the order and in here. the order on 1 hour order changed. Yeah, it's below the 50 zone, and after this candle we sell. Yeah, on this particular blue candle we sell. It goes up a bit and in here, but then anyway it gets down. Okay, those are the rules of this particular trading system. Relatively simple and easy to use, but unfortunately it does not generate a lot of signals, and I will show it to you in a second. So stop losses and take profits. Stop loss should be set at the local minimum or maximum. Like let's say, okay, in this case, yeah, when we've opened the position, so the local low in here would be this one, yeah. So we basically, oh, sorry, it's a short position, right? So a local maximum is right here. So when you sell it from here, your stop loss have to be above that, like above that, okay? It's 1 hour, yeah. And take profit should be 2 times bigger than stop loss. At least how I use it, okay? All right. Now, okay, we're going to be analyzing live market now with the help of this trading system. And let's see what we have here. Let's go for Euro USD first, and then we move to some other currency pairs or whichever you want. So let's analyze, let's say this week or last week as well, okay? Starting, let's say from the 1st of May. In here, there is a 4-hour time frame, yeah. Here is a Tenkan line. We see that basically on the 1st of May, the situation was very clear. The price was below the Tenkan line and both lines were going downwards. So it's a clear indication of bearish trend. And overall, I would say that those lines up until today, this is a bearish market. Yeah. So basically what we do, we analyze that one from the bearish perspective. Okay, so we don't open buy positions, we open only sell positions on Euro USD starting from the May 1st. Now we go to 15 minutes time frame. I'm going to change the template. I have all the indicators preset. Okay, so for us not to waste time. All right. And I can scroll basically back to the May 1st. All right. Like in here. Yeah, it's May 1st. Yeah, exactly. So we spotted a trendy market, and basically, yeah, we see that the market is quite trendy in here. Maybe in here it's not really trendy, and it's 30th of April, so let's get back to the 1st of May, okay? So what we are looking for is we are looking for rebound signals from either major or minor EMA. We can't find any here. The first one, we receive it here. So it rebounded. We have a confirmation we can sell. Yeah. And then another one comes. Oh, basically, I don't see. Let me just. Okay. So we would open a sell position from here. Yeah. It would go up a little bit. I just want to see how many pips. 20 pips. 20 pips up. It would not trigger our stop loss. And some of you could have opened another position because it rebounded from the EMA in here, and it's also a confirmation. So either you don't do anything, like you have a position from here, or you add any position from here, and you go downwards, okay? In here, another signal was spotted, like it rebounded. It went from here, so you could have sold it from here, somewhere from here. Not from here, because obviously at that moment when the market was here, it wasn't going from the oversold zone. It started to go from the oversold zone only somewhere in here, so we could have sold it in there. So it rebounds from this zone in here, so we could have opened the position on those levels as well. It goes up a little bit, but at 15 pips, it doesn't trigger our stop loss. So we wait, we wait, we wait. Some of you may have opened additional positions when there were rebound signals from here, and then it goes down. So finally it closes you in profit. Another rebound signal is here, confirmation, go down. In here, confirmation, go down. In here, confirmation, go down. Actually, it was today, right? Yep, it was today. This stuff, yeah, it was today during the night, today during the day. Okay, two signals were generated and two signals triggered. All right. So that's of what we see right now. That it's going to rebound. Yeah, I'm just thinking. Let me just scroll it a bit. Yeah, it's not touched it completely, but when it touches it on the like 88 or 90 level, and when there would be a rebound, another signal would be generated. All right? Okay. So I do have received new questions. What's the role of MACD to find the signal? I wish you have listened to me before, but there is no spotting signal with the MACD. MACD only works in this system only as a confirmation of a signal, only on ambiguous market. That's it. We don't use it on trending market. We don't use it as making signals or spotting signals. It's used only on ambiguous market, only as a confirmation. That's it. So let's jump to maybe British pound or CHF, whatever. Let's go to British pound. First of all, we analyze H4. I'm gonna go for time frame Ishimoku as 1st of May. Yeah, it's also the same situation. The price is actually on the 1st of May, the price was above 10 counts, so it's up until 8 o'clock, right? Yeah. So in 8 o'clock, starting from 8 o'clock, we can say that the market is bearish up until now. Well, let's say up until this hour. It was bearish, but until 8 o'clock, we cannot say that the market is bearish. So up until, starting from May 1st, up until 8 o'clock, we're going to be analyzing the market on 15-minute chart, and afterwards, it's a bearish market, right? So let me just scroll a bit back. All right. Yeah. And I'm going to be applying a template. Okay. So before 8 o'clock, there was no clear indication of the bearish trend in here. So we analyze the market on 15-hour chart. But what can I say? That, yeah, we could consider the market to be bearish, because basically what we saw previously were two MAs, right? This one and this one. They were sloping downwards. The order is nice. I mean, the major EMA is on top. The minor EMA is in the center. The center line is at the bottom. All right, and so we can consider that the market is bearish. We look for rebound signals. We do have a rebound signal on the May 1st during the night in here. We have a confirmation. It's May 1st, and we could have sold it. Yeah, we could have sold it. It goes down. All right. Then we know that the market is bearish. We look for another trade opportunities, and we look for rebound signals from EMAs. There is no rebound signal. It just simply goes. There is a rebound signal. And we got confirmation, so we could have sold it in here. It tests one more time and goes down. Yeah, goes down. Probably some of you would say, no, this is just, now it's 70 pips. It's 70 pips. So you would, if you've opened your position, you would get 70 pips profit, and it's enough to close an order. If somebody, some of you would not close the order, they would have another opportunity. Oh, in here, look, it didn't reach the oversold zone. The maximum level of it was like 75 or something. So there is no position opening in here because we received the signal, but we didn't receive a confirmation. So there is no position. So those of you who didn't close it, the order in here, got their take profits in there. Okay. We look for rebound signals. We have one here. In here, yeah, probably in here as well, because it kind of rebounds. There is a confirmation, so we can sold it from here. Not from here, I'm not idealist, but I would have sold it from here. Yeah, wait for it. It retests 2 times, then go back. Like in here, another trading opportunity, another trading opportunity, another, no. There is no confirmation. There is no confirmation. But those of you who have entered in here, in here, in here, or in here, would catch their take profits here. Okay. Another trading opportunity in here, retest, confirmation. In here, retest, confirmation. So in here, there is also a trading opportunity. I would have sold it in here, and probably I would catch a stop loss because it's like 45 pips. So in here, I would open a trade, and I would catch a stop loss in here. Okay. But you see that basically market is changing. Starting from the trendy market, you see that the order of the moving averages, which it came, it became literally flat. So, but I would not close my position. I would wait for it, and I would catch stop loss in here. But since 1st of May, we had 5 profitable position and 1 stop loss, which is really good. All right. I can analyze another currency pair if you want. We can go for CHF as well. And then try to apply the second trading system because time is running out, right? Let's go for Ishimoku. All right. 4 hour, starting from May 1st. In here. Yeah, it's clear bullish trend. So both of moving averages is sloping upwards, and the price is above that. All the time it's above that. Yeah, it's all the time up until right now, like an hour or 2 ago. So we consider from the 1st of May up until today, it's a bullish trend. Let's go for 15 minutes. May 1st. Okay. Oh. Template. All right. Yeah. So this is the 1st of May. Starting, we spotted a bullish trend in here, so we wait for the market. Yeah, we have a signal in here. Yeah, you see basically that the market rebounded and there is a confirmation. So we open the position, and let's see, it went down, but 22 pips. 22 pips, it's not a stop loss. Another signal was generated. Okay, so those of you who missed this one could have entered even a better trading position in here. Those of you who didn't are just simply waiting. It's okay. It's not a stop loss. It's just okay. It goes up, then it retests. Once again, it's not a stop loss. And some people could, if the position was closed somewhere on those levels, yeah, how much is that? It's 50 pips. Yeah, probably some of you would have taken 50 pips profit. So you could have opened the position in here because it's also rebound and a confirmation, and it goes up. Then it rebound, confirmation, buy position. Then another one in here. Yeah, but the market is trying. It's probably a night break. That's why. Then what else? Yeah, some of you would have opened the positions in this area because there are a lot of confirmations and a lot of signals generated. Then it would have been take profit, or I think it would have been take profit if you didn't close it. There is another, retest of the moving averages and a confirmation, and it goes up. And clearly, it closes in profit. In here, another signal was generated, buy signal, another buy signal, and another buy signal. Okay. All right. So probably those signals would have been closed in. Now it's just 15 pips loss. So if the market went against you, it's just 15 pips. Okay. So we had like how many? Like 3, 4 profitable positions and no loss positions with this currency pair, with this trading system. Okay. All right. Let me briefly show you how the second system works. Let's take Euro USD as well. Everybody likes Euro USD. Template 1. Yeah, we have this 12 moving average. Then we have another 5 moving average. We have a RSI with a 50 level. Okay. So first, as you know, let me put it this way. We need a daily time frame, 4-hour time frame, and 1-hour time frame. And in order for me not to click it every time, I'm going to be putting all 3 screens behind me so that I can clearly see the situation and not going from one time frame to another. Okay. Yeah. So as we started to analyze it from May 1st, okay, let's do it from May 1st. May 1st. We take a look at the daily time frame. Basically, the situation is as clear as a bright day for us. It's the clear bearish trend. The moving average is at the level of 2163. Oh, sorry. The major EMA is on top. The minor EMA is at the bottom. The RSI is below 50 level. So it's clear for all the days starting from May 1st. We take a look at 4-hour time frame. May 1st. Let's see. Let me scroll a bit back. Yeah. In here, the situation is the same. Basically, a major EMA on top, minor EMA lower, and below 50 level. So, all right. We analyze H1, May 1st. just scroll back. All right. Yeah, the order is the same on hourly time frame in here. Yeah, you can see it's amazing. Like May 1st, 00, all the conditions are met. On daily time frame, the order, the trend is bullish. Bearish, I'm sorry. On the 4-hour time frame, trend is bearish in here as well. And on 1-hour time frame, trend is bearish. And here the order is the same and the level is below. So basically what we're gonna do, if we just took a look at the market on a May 1st, we would sell it. And boom, it goes down. So pretty much you could have sold it in any particular moment in here, right? Yeah. Up until the crossing of the moving averages, then they crossed, then another signal was generated, we would have sold it from here, and probably it would have been a stop loss. But no, you know, we would put a stop loss behind, before, above, sorry, this local high. So if we would have been trading in here and opening the sell position from here, we would put a stop loss behind this. So this one, it would not trigger in here. It goes down, it goes up again, but it's still below our stop loss. It does not trigger a stop loss. It goes down, down, and finally, let me just make it bigger. Yeah. Yeah, this situation. Sell from here, no stop loss, no stop loss, no stop loss, no stop loss, and it goes down all the way. So it would have been triggered you in profit, this particular signal. So what other opportunities to trade? I believe we need to take a look at 4-hour. Yeah, it was a sell opportunities up until 4th of May. Let me just see it. 4th of May. Yeah, up until here, and then later after, yeah, 4th of May as well. So 4th of May, this is a trading opportunity as well to sell it from here with the stop loss above this level. So it would close you in profit as well. In here as well, you can put it in here and sell it from there, and it would close you as well. And today on this candle, there was an also sell opportunity because all the conditions are met in this particular situation, and you could have sold it. Okay, I hope it's clear. Let's go for GBP, and we're gonna be wrapping this up. All right, on a daily time frame, starting from May. Starting from May 1st, right? The situation is very clear. So major EMA on top, minor EMA is at the bottom, below 50 level. In here on H4, let me see. The same situation all the time up until today. No, up until May 8th. May 8th is today, right? So in here, you can see that the situation is the same. RSI is below 50 level, and the order of EMA does not change. So we can basically sell at any moment when we spot the same situation on H1 time frame. Starting from May 1st, let's take a look. So May 1st. No, like that. May 1st, in here, there was a sell signal because the order of the MAs became the following. Major MA in top, minor MA at the bottom, right? And below 50 level, so sell from here to this level. Then they crossed. When they crossed once again, there is a sell signal in here, yeah, in here. Once again, major EMA on top, minor EMA at the bottom, below 50 level. We could have sold it with a stop loss above this line. So it goes, and I hope, let's see. How many pips would it get us? 120 pips. So it's more than enough to close in that position in profit. So it would close you in profit. Then let's zoom in. It would trigger a signal in here, in here, in here, in here as well. See? But probably in this particular situation, if you have spotted the signal at this moment, right? Yeah, at this moment, all the conditions are met, but then the correction starts. But your stop loss have to be above this level. Yeah, and probably it would have been closed by this one by stop loss, this particular position. But anyway, since May 1st, we had 3 take profits and only 1 loss. And sometimes losses happen. So far so good. It's time to end the webinar, but I'm happy to stay with you and answer your questions if you have any. So you are most welcome to answer your questions. All right, let me scroll. Is this class recorded? Yes, this class is recorded, and the recordings will be available on HYCM website. Can I get a copy? Yeah, I believe you're subscribed to this webinar via email, and then notification will come to your email, I believe. Okay, guys, maybe some questions will appear in the next couple of minutes. In the meantime, I'd like to tell you that we have a quiz for you, as always. There is a quiz. Come on. Okay. You can see this basic link on my screen. You can put, you can put this link into your browser, and a quiz would appear. There are simple 5 questions. After completing this quiz, you will receive, if you answer correctly, you will receive certification on your email from HYCM, which you can share in social media, which you can keep. And this basically certification will tell that you've successfully completed the webinar, and you have enough knowledge to trade on the market with the help of those 2 trading systems which I showed you today. What do I think about USD CHF? What do you mean? 1 year prediction, or 1 hour prediction, or 1 month prediction? I can take a look at it, but let me see. But I need a time frame in order to tell you what I do think about it. Because 1 hour prediction is much different than 1 year prediction, right? For hour and 1 hour. Okay. So basically, if you analyze market, if you take a look at, let's say, based on those 2 trading systems, what we look at the market right now, the trend was bearish starting from April 17th, right? And right now you can see that the trend is changing. Why? Because the price is no longer above this Tenkan red line. It's inside those two lines. Anyway, those lines are going upwards, and it can be a small correction right now. But I would not tell you that, okay, the market is going to continue be bearish and you have to buy it right now. I cannot say that. Though I cannot be sure that this is a really proper correction and it will go down. So if I would analyze this market with the help of the first trading system, I would say that we cannot rely on Ishimoku indicator when we have to go to 15 minutes time frame, yeah, and apply the trading system, scroll to the latest data, okay. And in here we see a confirmation of my words that the market is no longer really bearish or bullish, I'm sorry. The market is basically flat because there is only like 5 pips between those moving averages, and they are not yet intervened, but they will be intervened really soon. So I would say that starting from this time, right, from yesterday, the market is flat, and what I would advise to apply the rules of the flat market. And we know that the flat market rules are trading from the bottom line and top line of the envelope when there is a confirmation of stochastic, right? So what we see here, it was like, come on, 2 hours ago. 2 hours ago, it touched the envelope line, and there was a rebound signal. So basically on this candle, we could have entered market in a buy position with a take profit on this level. There is a control panel for me, and this is basically in here, with a take profit of 10040. So I would have opened a position in here with the take profit to here. If it goes above those moving averages and touch the bottom, the top line of the envelope, and there would be a confirmation from here, I would sell it to the end of the envelope. You need to understand that basically market, there was a good bullish movement recently, right? You can see it, it's a daily chart. Good bullish movement, and after a bullish movement, the correction starts. It can go down or it can become flat, but the correction, sooner or later, the correction would start. Also, if you take a look at the daily chart, right, you can see that this is the high, that this is the previous high. It was in November, and in here, yeah, on the daily time frame, it basically touched this level and rebounded, forming a sword candle, or dojin, some may say, and in here as well. So it's, from my point of view, it's a sign of a future correction. And if it's a correction, so, and it's a flat market, and 70% of all the time the market stays in flat condition, not in a trendy market, so it's the right time for a correction, and we can use it on our benefit, trading from lines of the envelope, so buying and selling it when it touches the envelope lines and there is a confirmation from stochastic. Okay. All right. Any other questions? All right. There are thanks from you guys. Thank you as well for visiting. Okay. I'm going to be just showing you the link once again. So thank you very much for attending webinars and for listening to me. I hope those webinars, today's webinar and the previous webinars, were helpful and you learned something good for yourself, right? Let me just scroll it back to the last slide. It doesn't want to come to the last slide with a link description. So here it is. I want to thank you for attending the webinar. I think it was useful for you, and I really hope you would use this knowledge in future. And I hope you enjoyed at some point. So I would like you to go through the quiz, receive a certification, and trade profitable. Thank you very much for visiting, and have a nice trading. Bye bye, guys.